And I'm going to start off Abneesh morning by reading the header to your note, which says a painful end to an overstretched drama. Given that now the merger has been terminated, what do you believe A are the potential reasons and B the road ahead?
Thanks, and definitely this stock will be under huge pressure today. There have been a lot of downgrades. We also downgraded. It was a 0-1 event. So three key things. Definitely we see this stock testing below 200 in the near term because it goes back to the pre-merger kind of valuation, which was around 12-13 times PE multiple. And second is there is an uncertainty in terms of the legal cases because Sony and Z both have filed legal case and that will be heard in the Singapore courts. So there is a bit of uncertainty on that. And near-term results also will not be great. Q3, the results we have already put out in terms of preview. So there will be margin pressure and OTT losses. Now coming to reasons, in our view, Puneet being the MD and CEO was not the main issue. In our view, it was basically 2 years time frame had happened. The industry dynamics is changing because this Viacom and Disney Star are looking at a deal. Post that, what will happen? Their combined market share will become almost 35% plus. And Sony is hardly 7-8% market share. So Sony has become very small. So maybe Sony headquarters thought that with such a small market share and even if they combine with Z, so 7% plus 16%, which is Z's market share, it becomes around 23% market share versus Viacom plus Disney Star at 35% plus. Plus the IPL rights, sports rights, etc. very strongly resides with Viacom and Disney Star. So that could be the reason. Second, of course, in our view, there is a gap in decision-making in Sony, given their decision-making happens from US and Japan offices. In the past, we have also seen that IPO and some of the other merger with Sony India was planning did not go through. So basically, India business for Sony is very small. It's a few decimal points. So that is why the 2-year time frame, etc., definitely was very long. And then they realized that the industry is becoming tougher. In our view, the Russia issue or the Puneet issue, those were very minor issues, and Puneet anyway was willing to forfeit and go and not be as the MD and CEO. So in our view, that was not the thing. So near term, it's negative for both companies. In our view, Z is an attractive option for any strategic or a financial investor from medium long term, given it is the second largest media company of India, which is a growing market. So net near term pain will be there, but uncertainty is there. So anyone who wants to buy the stock after today's sharp fall or the near term sharp fall has to live through the uncertainty of the legal issues, which I said $90 million of the Sony in the Singapore court. Second, of course, is what happens in terms of the minority stakeholders. Obviously, they'll be very disappointed with the turn of the events because 2 years they have waited and then finally when all approvals have come, the deal doesn't go through. So what do minority shareholders do? In our view, they will be looking at some kind of a change. We would need to see what is the uncertainty on that. So these are the reasons anyone looking to buy today has to buy from a 1 to 2 years. There is going to be volatility in terms of news flow, plus there will be a lot of uncertainty also. But medium long term, this is an attractive asset for strategic financial investor. So the current valuations will be low because of the uncertainty, but long term things could improve if they can really get a tie-up. Why do they need a tie-up? They need a tie-up for the OTT and the sports business. Otherwise, if you see, it's almost like a 350 crore net cash company. And for the entertainment business, they are quite sorted. But yes, for the OTT and for the sports, they do need investments, which a financial or strategic investor can provide. So that's how it will pan out.